traders, welcome to the TMT Pro Trader Premier video for Tuesday, August 9th. Well, we had another pause day after the job number rally that we had on the gap up on Friday. So now we're just kind of stuck again, and I'll show you that 30-minute chart. The Bollinger Bands are extremely tight, screaming a bigger move yet again. We just don't know which direction. But the longer term that I continually see in my trading model, I am neutral right now, but that means that's 50% on sell signal, 50% is on a buy signal. So, and I do believe that the signals I'm getting that are generating on buy will turn into a sell signal at one point. I am right now, looks really close, looking for a pullback, probably going into Friday, Monday, and then we would reevaluate. There's some key areas which I'll show you that we show you on the Premier in the trading video as well. So let's get into it because there's a lot of stuff that I want to cover today. Today is the 8th, as you know, excuse me, the 9th of Tuesday. Today, I want to look at the NYUD Advanced Decline with Volume. This is one of our models, and you could see here that we did get the push up on Friday, and you could see that the Advanced Decline with volume is just hovering above zero now, which is okay. But you could see we've lost a lot of momentum to the upside here. Now take a look at this. You'll see next is the McClellan Oscillator, also showing us a neutral state of the market. You can see we're just -2. Anywhere between that zero line, it gives you a neutral reading. But you see the Bollinger Bands are pulling in. So at one point in time, when the market decides to either continue to move higher and or lower, there'll be plenty of room before you start reading. You get an overbought or oversold reading in the markets. All right. Next, I want to show you is the VIX, and this here is the average true range with the S&P. Now, this is a great way of gauging volatility, an increase or a decrease in volatility. We have extreme complacency, guys. I mean, can't get any real, well, you can go lower, but what I'm saying is that this reading is extremely low. You can see what happens when you get these readings below this area. Usually follows with a market sell-off. Now, these are extreme sell-offs, but even just a pullback would be appreciative, right? You're right up in here, 2100. 2135 even would be logical spots for pullbacks. This is in the cash now, okay, in the cash index, all right. But I want to show you now. On top of that, let's look at the VIX itself, the VXX, and you can see here Bollinger Bands are extremely tight. Now, we did get a move outside the band here, and we got a move back in the band yesterday, all right. That generally creates a buy signal for the VIX, a sell signal for the markets. However, to me, I would like to see a little bit more push outside that band and a bigger candle up. This is just basically a black candle, possibly showing a reversal, which is fine. So we need to pay attention to the VIX the next couple of days. I definitely would have you guys make sure you watch the VIX, because the VIX is going to be a telltale sign here, going forward. All right, so now let's go into the dollar. We have watch the dollar yen too if you guys have the feed for it. I mean, the Japan came out with a less stellar stimulus package. Basically, what does that tell me is that they're exhausting themselves as far as what kind of stimulus or how much stimulus is being put into the market. And dollar yen really took it on the chin. I think that's going to take down a lot of the global equities as well. So it'll be interesting to see eventually at one point. Now, everything does take time. It's all in due course, but watch the dollar yen. Because as you can see, when you get a yen rising, that's not a good sign. I don't know why they call the flight to safety the yen, but unfortunately, that's one of the reasons they buy the yen for. Watch the dollar itself. I think the dollar, it's not out of the woods yet, but needs to really take out this local swing high here, 25.21. If it can do that, and we get some crossovers in our MACD and RSI on volume, that'll really alleviate a lot of that short-term selling pressure. Now, in the longer picture, we have higher highs and higher lows, so that is constructive. Okay, I don't think the dollar goes lower. I think the dollar goes up, which would eventually put pressure on commodities and equities, U.S. equities. Okay, nobody wants a strong dollar. Here's gold. We talked about this yesterday. I like to see gold try to kind of fill that gap a little bit here, or even halfway to that gap, and then roll over, and to look for logical spots down to like the 123, 122-ish area for that pullback. You can see that the momentum is definitely not as strong as it was on the previous July rally, which I mentioned yesterday. Silver, same thing. Here's that target on that double top, right? Comes right down to that 61.8. Excuse me, 50% retracement at $17. Again, it's doing the same, rolling over. So momentum isn't as strong. We really didn't go anywhere yesterday on the metals, so we really need to watch patiently what's happening. GDX did pop up a little bit here, a little bit more into that 31-ish area and fail. Look for that sell signal and that sell trigger on your trading plan. That would be a good opportunity to look for just a short-term pullback in the GDX. You could see here that momentum has totally clearly reversed to the downside. So just pay attention to those metals if you're trading it. Next is TLT. I had a couple of emails. Oh, Mark, could this be a descending triangle? Sure, it could. Absolutely. It's depending on how you want to trade it. It still gets you to the same point of lower prices. So I have an M-top formation. Definitely could be a descending triangle. You measure the mouth and put that to the middle, and there you go. And it's going to be your price action. But here's a very um, good, reliable two patterns that we have bearish, and I do think that rates have definitely put in a bottom. And nothing is definite. I shouldn't say that, but I am very strong to say that rates um, are rising. You're getting into a rising rate environment instead of a lower rate environment in essence. And I want to show you just real quickly. Here's the 10-year. Okay, now it does have a little hurdles to take, but little inverted head and shoulders. We already took out the neckline. I really want to take out this local swing high here at 159, and then let it run up, and it'll get a little bit of a pullback, and you can short bonds. And that's where I think, and even the 2-year still in still in a downtrend, low lows and highs, but I'm watching that 2-year to see if that breaks out to the upside, and then everything else should follow suit as well. So TLT, I'd like to see us get into that 140-ish area right up in here, and then I would look to start shorting bonds again into that descending triangle, and then that'll make also a lower high from this previous high and that previous high as well. All right, let's go into see the VIX. Just want to show the VXX. I think the VXX had a reverse split this morning. I'm not sure. But from what I just read it, I didn't even check the intraday charts yet. But I want to get this video out. But I think VXX had a reverse split. You could see here just deterioration. A lot of short interest in this, guys. When it turns, it's gonna turn. It's gonna be ugly, very ugly. I would not be looking to short VXX. I'd be a better buyer than a short trader in a VXX. Spiders, just want to show you where we are here. We made new intraday highs yesterday, and then again we start to fall. You could see the momentum is starting to wane again. And again, logical spot would be the 214. All right, that's that swing low here from a week ago Tuesday, and then of course the 50, and then of course the bigger picture of 210, which I do believe that we would get there. 60-minute, just want to show you the momentum waning again. All right, and that could be a good gap fill area too. That's the first target to the downside. Now here's this 30-minute. You can see, look at how crazy this market is. 16 days, just about virtually within its range. We had one down day last Tuesday. We shot up on Friday, and now we're hovering above the outside. Now it's still bullish, but look at how tight these Bollinger Bands are. Very, very tight. Excuse me. Next is going to be the transports. Guys, this is going to be the canary in the coal mine. If the transports start to break down and does not follow new highs, it's far from being the new highs. I've showed you this chart for the last month and a half. This is something that to me is a big no-no if you're a bull. If you're saying that we're going to have higher prices, well, you better get participation in the transports and in the Russell. You're not getting it in both. And here's that still lower low and lower high. We need to take out this local swing high to get going to the upside. And we just can't break this horizontal trend line area of resistance. And we also have a descending trend line that can't break out of it as well. Okay, so this is something of interest to keep an eye on during the course of the trading day. Here's the IWM. Again, far from making new highs. Far from making new highs. But let's see if we get momentum and push to the upside. And this is a sample of our premium video, guys. And I mentioned yesterday. This is nothing for what because it's just too short. I can't get a long video out. But we put out some really big actionable long and short areas where the market would either pause and reverse or pause and move higher. So something, if you guys take a look, go until you see a sample video on the website. Next is going to be the Qs, and last, you can see here. And by the way, those sample videos that we put out, we have a trade. We drop it down to a 15-minute chart where ideally, if you have a nice little trading plan, this will actually add to your performance. Have a great day, everybody. We'll see you tomorrow.